Welcome everyone. Welcome to Rethinking Balance Sheet. And this every Friday we talk about the balance sheet. We talk about what's happening in the world of finance. And joining me as usual this week is Ravi from Sage Capital. Ravi, welcome to the show, and really glad to have you with us. And what do we have in store today, Ravi?
I think today we got a superstar on the show. I think everybody wants to know what's going on with CTOS, with the listing, and stuff like that. So we got the CEO Dennis with us today. But in terms of balance sheet, of course, it's I think if you're an SME and so on, it's a very, very important thing. Is how people perceive you and how you manage that perception of you when it gets onto these credit bureaus and stuff like that. And if you're on your balance sheet, how you can use something like CTOS to understand how the quality of your debtors, etc., is useful. So I think it's a very useful show today. It's very topical. So, yep, another week of lockdown. So, what better way to spend a Friday morning than learning something useful about finance and corporate finance and the balance sheet, yeah?
Absolutely. Absolutely, Ravi. And it's going to be an exciting show. And we've got Dennis Martin, who will be joining us shortly. And Ravi, you want to just quickly do a quick introduction to Dennis?
Oh, Dennis is, I just went on the phone. Dennis has got a pretty interesting background. I'm surprised I've not met him until today. And great to have him on the show. A New Zealander, yeah. Spent a lot of time around Asia. In fact, what was interesting, he's also worked on the original secrets for Bank Negara. So very, very experienced in this area. And it's just really great to have him on board. And we can look at all those questions. And I think, as usual, we've got our series of questions. People joining us out there, please raise as many questions as you can. Yeah.
Dennis, welcome. Great to have you here with us. And, maybe you can kick off by just telling us a bit about yourself and how you got to where you got to it. And maybe just some very quick introductions of yourself.
Sure. Thank you. And thank you for having me on the show. And good morning, gentlemen.
Morning.
About me. I'm the group CEO at CTOS Digital, and I've been in the organization for a little under 5 years now, and it's been a fantastic journey. My background is I've been in this industry for a long time, over 20 years, and prior to that I was a banker for about 17 years. So I came from the banking into what we call the credit bureau industry. So we call it a CRA here in Malaysia. Globally, they're referred to as credit bureaus. So if you hear me mention credit bureau, it's the same thing. I've had a fantastic journey. I've managed to work and live in a number of countries in Asia, including in Hong Kong and Singapore. Spent time in Vietnam, spent time in China. And like you said at the beginning, I've spent some time in Malaysia working with the CTOS team, putting CTOS back in 2001, I think it was, into Malaysia here with the central bank.
Fantastic. And there's always some misconception of what credit bureau is, how it differs from BNM or Bank Negara Malaysia, and what its purpose is, and how it kind of works. Maybe you can clarify some of that and help us get some understanding on credit bureaus, its functionality, and also how it differs from all the other different pieces of the Bank Negara setup.
Gotcha. Let me give you some background on CTOS, and then I'll go into the differences between CTOS and CRIS and how we work together and so on. So actually CTOS, we're proud to say, is very much a Malaysian company. It was founded over 30 years ago by a couple of brothers, ex-bankers, who left and really saw the need for information for organizations to make good decisions. And I think that was lacking 30 years ago. And so they grew this as a family business. They did very well. Back in 2014, I think they realized they'd reached their peak in what they can do as a family business, and they needed someone to come in and give them that next level, if you like, and investment of capital, but also the expertise and skill sets to make this truly what it is today. And so back in 2014, a PE fund called Creador came along, took a 70% stake. Subsequently, that increased to 80%. And Creador really put in place the foundations to become what it is today, a publicly listed company with over 3 billion in market cap, etc. And so that has been a fantastic journey. And what they did is to transform the business from a local small family business to a very strong local company that now has a regional presence. Now, in terms of the difference between CTOS and CRIS and what we do, fundamentally, we still do something similar, and that is to provide information to help organizations make informed decisions. And that's the backbone of any CRA. But over the last 5-7 years, we've transformed to being much more than just that. We truly are a digital business. So now we help organizations participate in the digital economy while still giving them information to make informed decisions. And we have a range of products that do that. We can talk about that later on. The difference between CTOS and CCRIS, well, CCRIS collects bank information, right? So governed by a central bank, they collect that information. Once a month, the banks have to upload their information on their account holders. And it's just for the industry that's governed by BNM. CTOS is everything plus that. So we are one of 3 organizations that get access to CCRIS, so we get that CCRIS information. But more importantly, we also have off-bank data. So by off-bank data, I mean we get information from organizations that are not part of CCRIS. So we get it from the telcos, we get it from SMEs, we get it from a whole range, of other non-bank lenders as well. So we have the complete picture, if you like. If you go to CCRIS, you get one part of that. But if you come to CTOS, you'll see everything that's available.
So extremely interesting. And I guess the big question a lot of people have is, how do you build that healthy credit score, right? How does that work? How do you improve, both individually and I think for a business, especially for SMEs, right? So how does one go about doing that?
Yeah, I think let me explain what a score is first, and then we can go into how you improve it and so on. And I got to say that a score is a score, whether it's for an SME or a corporate or a consumer. A score is fundamentally the same thing. Basically, it's a number that summarizes your credit information, right? If I'm going to put it really simply. And so the number, the higher the better. Typically, the higher your number, the better you are in terms of your credit profile. Why is that important? Because people look at how you behaved in the past or your credit profile to determine how you'll act in the future, right? And so that's when we know that's the case. We know that how someone's behaved in the past will predict how they're going to behave in most cases in the future, and that's what a score does. The other thing that a score does is that it helps you digitize your process. Now, if you want to be part of the digital economy and you want to make quick decisions, then you can't afford to sit down and have someone look at a report and go through it and highlight the issues and then make a judgmental decision and so on. A score makes you able to take all that information and plug it in and have what we call cutoffs. So if you're a business, you can say, hey, any score above this level is an automatic accept. Any score below this level is an automatic decline. Any score in the middle, I'll refer and then take a manual process to it. And so that allows that automation, if you like, to a larger degree. And that's very important. I mean, it wasn't that long ago here in Malaysia, if you wanted it, particularly for organized SMEs, if you wanted a loan, it could take weeks or months to get approved, right? And I think everyone knows that wasn't sustainable. People needed answers quickly. There was strong demand, and there was always competitive pressure to make these decisions quicker. And so scoring enables that. And most organizations have internal scorecards. So they score their own information, and then they pull from us to get the external score. So because they only have their own information, they want more, they come to us and they amalgamate these scores. So they use both these scores together to predict someone's future behaviors. How to have a good score? It's not complicated, right? It's very simple. Pay your bills on time. Don't have too much debt. People look at me and they go, a score, that sounds very complicated. And I've got to say that I do have data scientists, very specialized, exceptionally talented, smart people who build these scores, right? But if you boil it really down, it's just a few key things. Don't have too much debt. Pay it on time. If you're a consumer, don't get every credit card that's offered to you in a supermarket, right? I mean, if you go into the mall now, you've got these stands of banks that are trying to give you a credit card and you get a free umbrella. Well, too many cards impacts your score. So don't do that. Only get what you need, and so on. So it's a very simple thing. And of course, the stronger your score, the more you're able to do. For example, right now, I mean, banks are looking for good customers, right? Banks are looking for customers that they know I've got a higher likelihood of paying the debt because it's difficult out there. Same with SMEs. SMEs can't afford to make mistakes. So scores are more prevalent now than ever.
Just interesting, you said about, just digressing a little bit on this credit card, and probably that's interesting. I think some people just make it their business in life to get those free gifts and don't use the credit card.
Yes.
In theory, they've not actually run up their credit, but does the score get affected by that?
Yeah, they've still got access to the credit, right? And in a day's notice, they can run up those balances. So they do.
Yeah. Yeah. Okay. So I know quite a lot of people who are just experts at doing this, and basically, to be fair to them, they're never going to use a credit card. They fully understand the cost of credit through, on the credit card, and to them, it's a highly profitable business. But I suppose that's the problem with, you can't deal with some of these exceptions, right?
Well, no. Plus, the reality is the exposure is still there, right? I mean, even with the best of intentions, you get the card, you're not going to use it. 12 months from now, COVID's hit, your business doors are closed, you've got no money coming in, what do you do?
Yeah.
You never thought it would happen, right?
Yeah, that's true. Anyway, that's interesting. I know, like I said, this was a good piece of advice for people who just want to enjoy the gifts.
And like I said, that applies to commercial entities, SMEs. Only borrow what you need when you need it, and also pay your bills on time.
Just getting on to that and a little bit on secrets as well. Secrets very much, if you remember, we had a major Asian, we had two banking crises, one in the late 80s and then followed by the one in the Asian financial crisis. And the fourth pillar was to improve how the banks are made more robust. And I think that's paying off to a great extent this time. And one of those pillars was, of course, the creation of secrets, which actually gives very good data for bankers, makes life a lot easier, and of course, credit evaluation. But I come back to this, and you're a banker, and you understand this. Some people think their business is fine, but if you're a director and you've got a simple thing like, and I see this, it's on secrets, you haven't paid your credit card, and there'll be defaults on the credit card. That's just bad news, right?
Well, it's bad news for you personally, clearly, if you're defaulting on your credit cards. It can be bad for your business, but it depends on the type of business. So if you're an SDN Berhad, or if you're a public listed company Berhad, then your personal information is not included in your scoring, in your reports.
Right.
It's not there. If you're a sole proprietor or a partnership, effectively, those are just personal businesses, right? They're all about you. You control everything. And so how you behave with your finances will impact your score in those circumstances.
Right. But it's interesting. Shall we?
So I guess one of the big questions, Dennis, is that many times people come and bitch and complain and say, "Look, CTOS has got it wrong. No, that's wrong. This not me, and this and that, and all these other things, right? I mean, is there a way to correct such things and rectify and enable us to fix it?"
Absolutely. We're actually mandated under the CRA Act to correct any data that's wrong. I think the CRA Act gives us 21 days to correct any information. I don't let my team have 21 days. I think that's way too long, right? So they've got a lot. I'm not going to tell you how many days, but it's a hell of a lot shorter. It's a lot shorter than 21 days. And so we really want to hear from people and tell us if the information is incorrect, because we will fix it. Now, I've got to temper that with, there are a number of people who would come to us and say, "Hey, it's not wrong. It's not wrong. The information's not right. Can you get rid of it?" When it is right. Right, and they just don't want it in their score or in their report. Quite a lot as well. Sometimes it's a surprise to people. Maybe they've forgotten they've got a credit card debt, or maybe they've forgotten they've got this or whatever, and they go, "Hey, this is all wrong." And we go, "Actually, no, it's right, but maybe you forgot about it," and they have to go away and sort it out. But I can tell you this: if it's wrong, we will fix it. Absolutely, that's one of the criteria that we have. We really want to make sure the information that we have on our database is accurate as possible. And look, the reality is we get our information from third parties. We get it from Secrets. Secrets is not always right. We get our information from other third parties. They're not always right. So we don't create the information, we collect the information. And as a good collector, if it's wrong, we'll fix it.
No, and I can understand, because people forget about small little things that they've done in the past, and it comes back to haunt them at some point in time, or forgetting to pay that extra 10 ringgit on a Maxis bill or something like that.
That comes to the next point about, come on, why don't check your information with us regularly, right? Don't wait to be surprised. This is all about financial literacy, right?
No, that's true.
For SMEs, for corporates, for consumers, it's always the same. Understand what others see about you.
No, absolutely.
Can I ask, what does it cost to get a check done with you guys? Do you have to? Is it a difficult process?
There is a process.
I've never bothered. I've only, even personally, it's only when something goes wrong with Secrets. I've had just to share. It's a very interesting story. I prepaid my loan of several 100,000 ringgit upfront, but there was a prepayment penalty if you paid the loan up front. So I told the bank, no problem, you keep the charge document. But the prepayment was, in the loan documents, they made a mistake. If you paid down to $1, I think the terms are wrong. So I took advantage of that and I paid everything down but $1. Their system continued to invoice based on $1. 0.1 cent went on for 6 months, and it automatically sent an instruction to the central bank, CTOS. Yeah, of course they once I wrote a fairly a persuasive letter to the bank, and the bankers knew me and said, "Oh my God, it did nothing they intended." But it does happen, and then you suddenly find out you got a notice coming in. You owe them $1.26.4 because that $1 had accumulated over 6 months, right? But again, how do you go about this? Is it on your system, on your website, or how do I just get my check done if I want to do my company and myself personally today?
The first thing I'd suggest is you do go and download the CTOS app. So go to the Play Store or Google Play Store, whatever it is that you go to, and download the CTOS app, and you can do it all online. I mean, we're a digital company. You can go to our website at ctoscredit.com.my, or you can actually call us, and we do have a number that you can find online and that you can reach out to us. The cost normally for an individual looking to get a report is around 25 ringgit, a little less than that right now. But I will say that right now we have a deal. You can get a free copy of your CTOS report and CCRIS for this month. So yeah, I know, good timing for you to ask that question, right?
Right.
This is part of our financial literacy program. It's also a recognition that things are tough out there. And so we have been offering this last month, and I think this month as well. So I would encourage you all to sign up, get a copy of the report, and have a look and see what's in there for free while you can.
Fantastic. There you go.
It's a habitual thing, right? You should look at this regularly. It shouldn't be a one-off because things change over time.
Yeah, no, and that's fantastic. So to everyone who's listening, it's a great time to go check your report. It's free for this month. Is that up to August 31st, Dennis?
Yeah, to the end of the month.
Merdeka
to the end of the month. All right, there you go, Merdeka deal. So it's CTOS.com, right?
CTOScredit.com.my, or I would suggest the app is easiest, and you can
just download
you can do the whole sign up, facial recognition, and so on
the app. All right, there you go, CTOS app. So check that out. I have a question, on coverage, right? How broad is the credit coverage, in terms of credit performance and so on CTOS?
Yeah, it's quite extensive. Not only do we have access to the CCRIS information, we've been collecting data for over 30 years. And so we have a lot of information. We get information directly from our SMEs. We have over 17,000 SMEs that give us their information consistently. We get access to telco information. We get access to non-bank lender information and so on. So it's quite an extensive database.
Sounds interesting. So for those who haven't checked it out, please do go to CTOS and download the app and get there. Ravi, you had a couple of questions. I think you had been mulling over.
One of the things is, I think one of the interesting ones for me, I'm a landlord, and I know this is because my properties in the UK, it's always so well checked, and that's been a perennial problem in Malaysia. I know there are companies which are coming up to manage rent, and again putting the rental business more digital. How do you see this? Do you see some traction especially for landlords? I think that's an important one. You don't want to get a tenant in and then find it impossible to remove them later.
Yeah, you're absolutely spot on. And I think when I came to Malaysia 5 years ago and I was a renter, I was surprised how easy it was to get a property. It was almost like, I didn't have to tell them anything, right? And they said, "Yep, can you pay? Yes, okay, great, I'm in." And for a lot of people, this is their most valuable asset or second most valuable asset, and they're giving it to strangers in the hope that they'll pay. And I just found that bizarre. So what we built is we actually built a tenant screening report, which we've launched. It enables landlords to screen tenants for typical credit history type stuff. Do they pay their bills on time? The usual sorts of things you expect. So that was launched a little while ago. It's been a bit of a soft launch. We're still finalizing and fine tuning the product, but it works. It's out there now. It's available. And I would suggest, I think this is a balancing act that we have. We do know that it's tough for landlords out there, right? Yeah, and that they're looking for tenants.
Yeah.
But I also know that if they don't pay, it's very difficult to remove them. So it's getting that balance right. And And I think for the price of a tenant screening report up front, which is less than 30 ringgit or whatever it is, it's for the security of
peanuts money. Let's be frank. It's peanuts money.
And look, and I got to say, just to add to that, I think the one thing we don't do is we don't give tenant screening reports to properties that the rent is less than 1,000 ringgit.
Right.
So we don't impact the B40 group. And I think that's a social decision that we made to make sure that we, these people need properties, and there are a different set of rules and guidelines for these guys. And so it's for above that.
Just interesting, because I know in London it's very different. It's a landlord's market, and you don't have at all vacant period.
That's right.
Yeah, and it's actually the tenant who pays to have I don't pay that as a landlord. It's actually the tenant who pays. Well, the market gets to that level in Malaysia, but I see just walking around One Kira and the number of empty apartments here. I still say pay that $25.
And I think one of the things is that when you do buy our tenant screening report, because all of our reports require consent, we can't give you information unless that person has consented. And so the person has to consent to giving you that data. If they don't consent to giving you that data, it probably tells you something, right?
Absolutely.
That's an early warning.
Yeah, early warning of trouble ahead.
So for those who are watching in, if you have any questions for Dennis, just shoot them in the comment section and we'll try to get them. We're going to take a short 30-second break right now, and we'll be right back here with Rethinking Balance Sheet with Dennis Martin from CTOS, who's joined us today on our show. So with that, we'll have a quick Necole break. We'll see you guys in about 30 seconds.
What I found out, I just gentle guy, I just discovered this new learning platform they call Necole. Man, that's the real deal, I tell you, man. I just pay only $50 for 1 year subscription, and my life don't change. I don't use that how much job for this content, I tell you so. You don't believe me? I tell you, have you seen the link after we finish this call? Guy, you remember when I tell you, say, to learn 8 hours a day for class, they tire me. This is the real solution for me right now, because I learn in bite sizes at my own time, any place, anywhere where I want to learn. And if you get content across the board, oh boy, no be paper. I tell you, now the real deal with this. Okay, no, I go send you the link. No, I go send you the link. We could talk later. I want the Necole Martin to go. Yeah, I go to Necole. I don't tell you now. I'm gonna tell you. Go sign up. No waste time. The link now, digital.org. Okay, we go chat later, babe. Okay, I have to go back. Bye bye. I'm on this Necole now the deal. Oh boy, I go to Necole to go. No easy.
There you have it, Necole in Pidgin English. For those of you who understand Pidgin English, that's Michael there telling you how he got a job with Necole. So check out Necole.app. We're talking to Dennis Martin from CTOS. Dennis, very, very interestingly, when I guess one of the questions that comments that have come about is a guy called Daniel, and Daniel asked this question with a comment actually embedded. He says, look, banks have internal policies that tend not to favor past delinquents. Even if I settle a legal action against me, CTOS will maintain that record for another 24 months, as it is permissible under the CRA Act 2010. Given the increasing weightage that lenders place on CTOS reports, it almost seems like a 24 period will handcuff me when trying to access bank financing. What advice can you share with borrowers in overcoming this specific obstacle? Dennis?
Yeah, thanks for that. And look, the reality is banks do look at our reports, and they do assess the information that's in there to make some sort of decision. More of it's automated these days than not. But what I would suggest is, if you do have, and this is why, go and get a report before you go to the bank, right? So you know what they're going to see before you apply for a loan, is the first thing. And then if there is information on there, and maybe it's wrong, you get it fixed. And if it's not wrong, if it's accurate, then you need to explain it to your bank so it doesn't become a surprise, right? So they don't see it and they go, oh, hang on, you didn't tell us about this. And what's this about? Or they understand when they're going through the automation that there will be this outlier, and that there's a reason for it, things have changed, etc. So for me, it's about communication. It's boiling it down to, right? So understand what they're going to see, and then explain what's in there if there are any issues. And I can tell you from my own view that most banks are reasonable. If there's an old litigation case that isn't relevant anymore, they are not going to use that to hang you, because they want to write business. You're right. They want to write business. They want to write good business. So they're not going to stop that because of something that may be somewhat irrelevant now. but they also don't want to be surprised, right? And particularly if it's going through an automation process where they might say, if there's litigation, then this person goes into the refer bucket, for example. And so just explain up front, and then they know to deal with it.
I love that comment because Roshan and I did a whole series on a one day on just SMEs going to the bank, and I think this was not probably covered as well that day. But you're right, absolutely get that report. We do that. Then we said we make sure your CTOS is done properly. I think that now probably extends a lot more to actually checking your CTOS. It's like, again, small money to get that done, sorted out. Absolutely. And I would tell that to the SMEs out there because there's always a chance that there is a mistake. Yeah. And you're shooting yourself in the foot if you don't know. Yeah. And bankers hate surprises. We all know that, right?
That's for sure. Look, and we do collect extensively bankruptcy and litigation data. So if it's out there, it will be a report. So best you find out before you go in.
Absolutely. Just out of curiosity, I think we did mention we won't go off. We try to get, but I think Dennis, you're so experienced. Do you see this credit bureaus being used by employers going forward? If I was in a bank, I'd be pretty, unhappy if my employees got, it's risk. It's definitely a risk that they're going to put their hand in the till, right?
Yeah, so there are different types of reports for different types of situations. So like a pre-employment check would be different from a normal credit check. The pre-employment check will focus on things that are relevant for, if you're going to work in the accounting team, for example, have you had any issues with fraud? Have you had any issues with, getting bankrupt or whatever? These sort of things are very, very relevant. But if you're going to be a checker in a retail store, probably not so relevant. If you're handling cash or whatever. These reports are relevant. They're out there. I think if you have any doubts, pull a report is what I would say. If you've got to, certainly banks do it. But let me be blunt. Banks will pull reports, or they will do checks on anyone that they hire. In fact, I think they're mandated to do so. There's a reason for that.
Yeah, Dennis, I'm curious about the CTOS business. I mean, you've kind of grown to where you are today. Do you expect to grow and move into new services or products or verticals or horizontals that may potentially grow your own business? Where do you see yourself progressing?
Yeah, I think, and Ravi touched on it before when we talked about the property report. And so, we are very strong in the financial sector. We work with the banks. In fact, this is interesting. Majority of our revenue comes from SMEs. SMEs use us extensively. Banks are starting to use us much more as we go more into our digital products. We have the non-bank lenders, the largest in Malaysia, use us, and so on. We're into the fintech space. The peer-to-peers use us, but it's generally in that finance sector. A credit bureau typically, or a CRA typically, gets into different segments, and these are things like telco, insurance, health, motor vehicle, and so on. These are all around acquiring data assets, making insights out of those data assets and delivering them in a digital world. It's no different from what we do now. So we're just getting into that space now. We've just released our tenancy report, as we discussed earlier. We're looking to release a report valid for the motor vehicle industry. We're looking to work much more with the telcos. In fact, telcos are now starting to use our solutions across the board. If you're looking for handset financing, the telcos are using our solution. The health sector is another area that we can look to get into, and so on. Now, these are all major players in CRAs and globally, just not done here in Malaysia. So for our business, this obviously gives us a lot of growth opportunity as we enter into these new verticals. But also it helps in terms of being able to make informed decisions across whatever industry you're in and helping the economy to grow. Because people look at us negatively often. They see, we're restricting something. But often what we do, we enable things. And if I go back in my banking days, and I was a bank manager over 20 years ago, if I didn't know you, I wouldn't lend to you. Or if you hadn't banked with me for 10 years, or if I didn't have assets to back it up, you wouldn't bank with me, right? I wouldn't give you a loan. But those days have changed. So now you can walk into a mall, someone will give you a credit card. What's changed? Well, it's access to information. It's what we do. It's what CTOS does. We're able to give banks and organizations information so they can make calls on people they've never met, never worked with, never dealt with. And so we're an enabler for this. And so the expansion into new verticals is just more of that enabling access to credit.
Right.
If I can
No.
pick up on this point on just one where Roshan left it on products and this one, I think just a little bit digressing. Of course, with the pandemic, and we know this to be the case, and I think that's what Daniel's question came about. In any economic crisis, and I've been through many, you'll have to keep insolvent businesses going for a while. We don't know who will survive and who will not. But 2 years as we come on the other side, all these guys would have had restructuring issues. You may have, I don't know, maybe as high as 10 to 15% of SMEs, but they've got far stronger balance sheets after that. But for people like us, who are helping with this restructuring, what would you tell us, if you want to talk to people like CTOS and say, how do we get this information that the restructuring's been done properly? The balance sheets got much better. We're not the same animal that you looked at 2 years ago.
Yeah, I mean, obviously we have access to SCM data and other elements of commercial information that can help to show that if it's a couple of years, you can see the trends in the ratios and so on, and what's changed over time. If it's more recent, it's a little bit more challenging to demonstrate that change. But to your point, I think you're right in that there's an awful lot of SMEs that have changed their business model.
Yeah.
Right, and they've adapted. A lot of that is adapted around the digital process that they take and the way that they operate. They can't rely on people walking in the door with a bundle of cash and paying for something anymore. Those days are gone. They need to be able to have a digital presence. They need to be able to transact digitally and deliver goods and services. And so that business, and I think post-COVID, that will continue because it's added functionality to their business. And then they'll still have that brick and mortar as well for most SMEs because that's traditional for them. And so what they've done is they've layered additional capabilities on top of their business because of COVID. And I think it's a sad thing to say, but that's probably a positive outcome from the lockdown, is that it has forced change on organizations, and they will reap that. Now, obviously some SMEs will fall. They won't be able to sustain going through what we've been through, and that's very sad. But the reality is those that survive will be much stronger organizations because of it.
Yeah.
And Dennis, I mean, you talk, with all this digital disruption that's happening, I kind of sense it's an opportunity for CTOS, but I mean, is it going to pose a challenge or a potential disruptor that can come in and disrupt you guys? I mean, again, I sense it's an opportunity, but I would also assume it could be a big disruptor to your existing business, right?
You're right. It's an absolute opportunity, not a disruptor. We're absolutely part of that digital process. For example, we've got a product called eKYC. eKYC is about digitally onboarding your customers. For example, it wasn't that long ago, if you wanted to open a new bank account, you physically had to go to a branch and do a thumbprint scan. Remember that? Well, you don't have to do that anymore. Most banks now operate with an eKYC product, which does facial recognition software, OCR technologies on your IC card, knowledge-based authentication questions, etc. Nearly always that's powered by CTOS, this eKYC process. And so that's enabled organizations to digitally onboard customers in a lockdown environment. We developed this product before we even knew COVID existed. The approval for this was given late last year, and we've been rolling it out ever since. And so these sorts of things, we very much are a digital business. Now you've got other digital players. We've got the peer-to-peer lenders, for example, who came into the market a while ago. Most of those use us as well. The reality is you still need information to make informed decisions, and you still need help with having a digital presence. And we do all of that. And then you've got the digital banks coming on board. There were over 27, 29 organizations that applied for a digital banking license, and there are 5 they're going to get it, I understand. Most of those organizations are talking to us because of our digital presence, our digital solutions, and the data that underlays that. So the reality is, if you're looking at, some of these big retail organizations that have a lot of data, can they come in and disrupt us? Most of those are talking to us as well because their retail data is different to credit data. Right? Someone's retail spending patterns may not be a predictor of credit risk. So you need credit data. And you need credit data from without your own, so you're in your own databases, you have your own pool of customers, and you may have some credit data there, but you don't know people outside of that. We do, right? And so we have everything. And so we look forward to continuing this digital economy and pushing that through because it really is a value for us as a business.
Dennis, just again digressing a little bit and not to sound Orwellian, but are there stuff out there from Google and what's travel data that tells me about credit? Is there other people around the world looking at stuff like that and telling, well, of course, if you went to a karaoke lounge too many times, probably a bad credit risk. I'm not sure, but would that kind of data start? Sorry, the mind's going to all sorts of different places.
So the first thing is that there was a big push for social scoring previously. So social data to score. So it wasn't that long ago where you could look at how you use Facebook, Instagram, these things to predict your credit risk. Yeah. So you could build models based on who you associate with and what they look like to build out what you could look like as a credit risk. That'll stop. So the US passed legislation to stop agencies like ours or the US using that information to make scores. So we can't do that.
So that's in the US, but that's not stopped in Malaysia, right?
No, it has stopped because then if you look at Facebook, Instagram, these are all US companies.
US companies, yeah, all right.
And you can't get access to them. So no. And then there's the other thing as well, which is our regulator is very tough on making sure there is consent for everything that we do. Right? Nothing we do is without consent, be it company or consumer. And so we have to get consent. So we can't do anything without you knowing about it and you telling us it's okay to do that. So that prevents a lot of that issue as well. I remember working, just to give you a story, I remember working in one of the big global bureaus a number of years ago, and we were building models based on a whole range of things. We could predict someone's credit risk from their height. We could predict someone's credit risk from, height and other factors. But, there was so many things that we were looking at to build out credit risk models. But then it just became, it just was not socially acceptable. I mean, we're all individuals as well, right? We all have to borrow and we all have to do this. So it was all canned. All that stuff is gone. It's really down to the basic credit information again.
But I would almost argue health would be a key one. Yeah, I mean, I would love to. I know you got to be insured to cover that one. Yeah, I'm not sure. Yeah. Again, that's very sensitive data. Yeah, again, I can't imagine you getting hold of that at all.
Well, one of the things that we work with insurance companies, and this happens overseas, is mortality rates.
Yeah.
So credit bureaus can predict someone's mortality rate. Yeah, I know it's not a pleasant conversation, but we can, using information, we can analyze it to predict how long someone's going to live. We don't do that. It's something that we might look at in the future, but not now.
Yeah, and the same, the mirror in the insurance industries, the PIM information, which actually keeps a database of all the illnesses that you have, and I suppose they write risk. But that's obviously an area you don't get involved.
Don't touch that. Don't get into that. Yeah. No, we don't. We never get into information that's personal, that's not consented.
Extremely good. Yeah.
So Dennis, I'm curious. I guess many organizations are looking at private equity and also venture caps to come and help support their businesses. And I guess you have that experience with CTOS and Credo to some extent, who has, as you mentioned before, augmented your business and did some great structuring, I guess, to enable you all to get to this level. What else can you tell us in terms of the what Credo has done to accentuate and to enable your business to move forward and add value essentially for your business that maybe you can share with some of our viewers? Because I think a lot of them are thinking about how do I get that right partner, investor, and strategic folks into my organization to enable us to make that move just like you did.
Yeah, look, I think you hit the nail on the head when you said partner. A lot of people look at PE funds, investors, as purely a source of revenue, a source of money, right? Source of capital. But it's important to look at them as partners. And Credo is a fantastic partner for us. In 2014, they came in. They knew they had to invest ahead of the curve. So they knew they had to take some hit in the first couple of years to get the benefit going forward. And so they had to invest in people, they had to invest in product and technologies and data and so on to build up for future. And they were a long-term player, right? They weren't in it for a couple of years. They're in it, they've been now almost 8 years in the business and still in the business. And so choosing the right partner is critical, and if you're a family business that's grown up through and you've got expertise in what you do, often what you're lacking is the expertise outside of that little circle that you work in. you don't really have the expertise in balance sheet management. Maybe you don't have the expertise in understanding where this business can go to and looking globally and so on. And that's what Creator brought to us. They had a lot of expertise. They understood where this business could go to. They hired the people to make sure it could do that, and they invested ahead of the curve.
Thanks. Daniel has another quick question. He talks about buy now, pay later schemes seem to be booming in this e-commerce industry, especially during this pandemic. But underdeveloped credit markets like Malaysia, where 20% of the population uses credit cards, is there an opportunity for CTOS to expand to this market segment and leverage your large data assets and your credit analysis forte? Dennis?
Yeah, in fact, the buy now, pay later, they actually already use us. So we are already part of their ecosystem.
Maybe I think the other side of the equation, we talked always on people viewing you most of the conversation. We didn't really get into this, perhaps the last 5 minutes, or I'm sure we use this more usefully, is I'm the SME now, and I'm looking at my database, my customer base. I mean, I know you talked about digitization, but let's even talk about traditional business. How much do you think is the benefit of using a credit bureau to understand your debtors mix to a business? Is there any rule of thumbs or any kind of thing like that? Yeah,
it's absolutely fundamental. I think there are 3 parts that you use a CRA for here in Malaysia, and we've got a product called Credit Manager which does this. The first is to evaluate and to monitor, and then help to ensure that you get some collection at the end of the day, and so your recovery or whatever you want to call it. So and I think in Malaysia, SMEs don't use enough of the first 2. I think there's a big focus on, I'll be the ambulance at the bottom of the cliff, and how do I collect if things go bad? Yeah. Well, cash is king right now, right, for SMEs. Yep. They can't afford to have bad debt because cash flow is so limited. You get one bad debt, it could ruin your business. And so the evaluate and monitoring is more critical now than ever. And so the evaluate means, if you're giving credit terms, if you're giving 60-day terms or whatever, and you still need to do that, or if you're a money lender, or if you're a small lender, whatever it is, evaluate the client before you take them on board. So pull a credit report, see if they've paid off others. If they're not paying off others, clearly they're not going to pay you. And so it's a pretty simple thing to do, right? And so the evaluate process is absolutely critical right now. And I think we're seeing in our own data, SMEs are learning that lesson very quickly. And so there's a lot more activity in the evaluate stage.
What about the monitor space? Do you do something with it? Or?
Yeah, absolutely.
This is new to me as well, yeah.
Oh, okay. So we have a number of our SME customers who give us their portfolio of customer base, who we can monitor changes in their profile. So for example, we can monitor for new litigation cases, new bankruptcy cases, new directorships, those sorts of things. Right. And we'll let you know when that happens. And so you can keep ahead of where things are at. And so those are the 2 things. I mean, banks do this routinely anyway. They'll monitor their.
No, but that's not really.
Yeah. Oh, actually, banks do it more often than that. It's monthly or quarterly. But for SMEs, they traditionally haven't done a lot of that, right? They haven't monitored. But to have those warning signals, to have, oh look, this director's changed, maybe I need to reach out to my customer, or there's a new litigation case here. What does that mean for me? And understand what that means for me. Is there going to be an implication to that? Is the next stage for that customer to go bankrupt? Therefore, I should stop my credit terms, or I should reach out and talk to them. I mean, that's critical right now. And so this whole monitoring is certainly taking off.
Actually, Dennis, on the other side, I would like to think about it also on in terms of the good news side of it. If I've got in new capital, I've restructured my balance sheet, that needs to go out. I mean, of course, there's all this bad news stuff that you talked about. But what about the good news stuff? Again, I suppose that's how that works better is something I perhaps also need to understand a little bit better because we've got a huge problems. So that when you've got a brand new balance sheet after restructuring, you've got injected new capital. I mean, you need that to happen like almost on the run. You can't wait for 6 months, 12 months because the business has so fundamentally shifted. I think on the good news, I think we certainly have to have some conversations on how we get that good news part of it, so that people are encouraged to restructure rather than have a mindset of pushing, leave that and let's not worry about it. Or I think that's what Roshan's smiling away, because that's right from the word go. I think when the COVID started, we talked about restructuring, we talked about mindset. Probably that'll be a great incentive to get people to think about restructuring if they can see that their credit scores are going to improve significantly very quickly. But I keep, like my good friends who in the HR, like Roshan probably would say, people must see reward immediately for what they do, not take years to see the benefits coming through.
Yeah, the challenge is that when you restructure in terms of the score is working on historical data.
Yeah,
and so you won't see, it's not an instant gratification system,
sure.
Right? So you won't see a restructure and then you won't see an immediate change. You'll see a change over time, as you, and 6 months later you'll see that change.
Right.
And same with secrets, etc. You'll see that change. So, but interesting you bring up that positive side of things, and that's also something that we're focusing on is, how do we collect information that rewards good payment behavior? How do we reward people or companies that pay their bills on time? And so we're building out what's called a positive database. And so we're asking our customers to contribute their list of, or their information of their people who pay on time regularly, people who have restructured and are changing, so that we can get positive information. And the reason we do that is because the positive information means, hey, look, I'm a good payer. I pay my bills on time, or I'm a good company, I pay my bills on time. But what does it mean for me? What's the benefit of that, right? Apart from having a good relationship. But what we want to do is say, look, if you do have a history of making good, strong, positive payment, then you're the sort of customer that banks want. You're the sort of customer that future SMEs want to deal with. And so you're in a much stronger position to negotiate on interest rate, fees, whatever it is that you're looking for, the structure of the deal, whatever it is. And then that becomes a much more stronger proposition for organizations. And I think, we're in that space now, we're collecting that information. And that is how CRA globally have gone as well, much more into the positive information.
Fantastic. I just have one question, and then we'll wrap up. I think it's been an exciting, engaging conversation, and learned so much today. But I guess the concern a lot of businesses have is being hacked, cybersecurity, and really how safe are you guys, and what's happening, in terms of security. What you want to just share a little bit on your thoughts on cybersecurity? Does that keep you up at night?
You've actually, I get asked from investors and all the time, what are the risks that keep you up at night? Security is the number one thing, right? There is nothing more important than making sure that our database and our infrastructure is secure. It is where half of all of our IT spend goes every year, just on security. I have an infrastructure security team. I have an external enterprise security team. We use external security teams to try and penetrate us. We do everything possible to make sure that we are at the highest level possible. We apply to ourselves the same standards that B&M have put on the banks. It's called RMIT. So the banks have got to apply that to them. We're not a bank, but we apply the same standards to ourselves. And I think we're the only CRA in Malaysia that does do that, because it's that important to me. We do not want to be the victim of ransomware, hacking, denial of service, these sorts of things. And I think that makes me laugh as well, because most consumers, when they register with us, they've got to give us a copy of their IC. And they don't want to do that because they're not sure what we're going to do with the IC information, or how secure is it. Well, we already have the information anyway, to be honest. The second thing is, you're probably sitting in the most secure environment that's possible in Malaysia in CTOS. We're a company built on trust. Right? If you don't trust us with your data, you won't give it to us. And so we have to make sure that's the highest thing, that highest standard that we keep to, and it certainly keeps me awake at night.
Thanks so much. And for those who just coming into the show, remember, you can actually get your free credit report in August, ctoscredit.com.my, the site's out there, or use the app, the CTOS app, and you can download that and get that. Dennis, has been absolutely riveting having this conversation with you. Ravi, your final thoughts as we wrap today up, and Dennis, I'm going to come back with you with some final piece of advice.
The Merdeka offer was my final thought was, I can't imagine anything better than the Merdeka offer, but I think we can also say, I think what's reassuring is having talked to Dennis today, is I think that security is the last point that was said, on security. And I think we're also at the verge of, I think the facilitation of the digital economy is all exciting stuff. We could go on for a long, long time more. But like I said, if you're going to leave anything with a final thought, I agree with you, Roshan. Go get your CTOS score.
Yeah. Yep, fantastic. And Dennis, just to wrap this up, your final piece of advice, your nugget of wisdom that you want to share and impart with us as we depart, your final take on this today.
Look, I think information is king, right? So be informed about yourself. as a company, as an organization, as an SME, as a consumer, understand what others see when they look for finance, and they're looking at working with you. And so, like you said, get a copy of information, find out what's there. If it's wrong, fix it. If it's not wrong, explain it. Communication is key, and I think you can't underestimate that. I think we will continue our digital journey. We have a number of products now that support that digital journey for SMEs. Understand who you're doing business with, that whole EMR, so evaluate, monitor, and then help on the collection side. I think that's very important for SMEs as well.
Fantastic. And next week is Malaysia Tech Week. For those who don't know, we are partnering with MDEC on a number of shows. So every day there's a different show that's going to be live. Next week on Rethinking Balance Sheet, we have Tinesh Kumar from Lapasa, the CEO, who'll be joining Ravi and myself in an engaging conversation. So next week's Malaysia Tech Week, every day there is something tech happening, and with MDEC, our Malaysian tech agency, Livelihoods have partnered to bring you some fantastic insights. So don't forget to check out next week, Rethinking Balance Sheet, same time, 10 a.m. Friday. We will see you. And for those of you who missed the previous episodes, you can always check it out. We have access to that on YouTube, LinkedIn, and also on Facebook. So with that, Dennis, thank you so much. Really appreciate having you with us. Ravi, as always an engaging conversation, always exciting. Have a great weekend, everyone. Please stay safe. The numbers are excitingly exciting as we continue to ponder our country and also the next steps of our economy. So with that, stay safe, stay well. Have a great weekend, everyone. And as always, we're going to end with a short little clip of Necole. If you haven't got your best personalized learning tool, it's absolutely, it's pretty much practically free. Get it at necole.app. So goodbye. Have a great weekend, everyone. We'll see you next week.